Don't be discouraged. It's often the last key in the bunch that opens the lock. Folks, every single day we chart the markets. Why? Because practice, practice, practice. That's how you get to Carnegie Hall. Practice. We want to understand the price flows. That is what it is all about. The magic of the weekly vertical crossovers that we talk about over and over again is what we look for time and time again to give us successful practice trades. That's what we talk about. That's what we look for. And again, we want you to understand what is going on in these markets. We separate the signal from the noise. The signal is price movement. You hear all sorts of stuff in the news, the financial press. You read it, you hear about it, you watch it. But again, what really counts? Price movement. That's what really counts. That's what we learn to track. That's what we are all about. Now, if you haven't purchased our book, Charting Your Way to Wealth, we have a copy available for you. All you got to do is follow the link in the show notes. We have a book for you. We so appreciate all the support that we get to help us be able to put this information out on a daily basis. Appreciate our Patreon supporters, and just thanks. You got questions, don't hesitate to email us. If you have ideas for shows, things that we don't explain well, again, please let us hear from you. Remember, we're not a stock calling service. We're an education firm. We want you to practice with us and figure out how these markets move. Now, we see that stocks are up for the day. Bonds and gold are down. We like to see them moving in opposite directions. That is the stock market versus the bond and gold market. Why? Because typically the market should be going up, and bonds, which are typically somewhere where you go for a safe haven if the market's not doing well, should be going down. A lot of times the same thing happens with gold. We're seeing things move in the predictable directions this day. Not that the market always has to be moving up, but if the market's moving up, gold and bonds down. We're seeing that happen. What do we see as far as the weekly charts go? Well, let's jump first into the S&P 500. What do we see here? Well, we've had the price percent oscillator laminated there almost here going on into this week. We see it laminated on the signal line. Price percent oscillator is again, looks like it's just below, maybe bouncing off. Again, with the up movement in the market today, it's a lot closer than it was yesterday. It was actually moving away from the red signal line. Derivative oscillator's gone positive. What does our Heikin-Ashi candlestick look like? It's a red spinning top, almost a doji, which of course means lots of indecision. Of course it is. We've had indecision now going into the third week about where things are going. We go from the weekly to the 2-day. What do we see there? 2-day is actually the price percent oscillators heading down, where we are forming. Again, remember that first candle was Monday, Tuesday. This latest candle is Wednesday. Won't finish drawing till Thursday, but it's forming a red down candle. So again, we'll continue to keep our eye on things. We can see price is moving down as far as Heikin-Ashi candlesticks go. Derivative oscillator losing momentum. Price percent oscillator still heading down, but again, has not crossed over on that 2-day chart. We're really watching and waiting for that to jump into a practice trade. What do we see on the 4-hour chart? Down movement in the morning and gaining some energy in the afternoon. The price percent oscillator is still negative on the 4-hour chart. Derivative oscillators losing downward momentum. So we'll continue to watch, see how this week shakes out. We're in transition, don't know where things are going. So we're going to watch, wait, and see. Remember, we still have the weekly charts in a confirmed down move, waiting to see if this 2-day chart is going to rotate over heading down. And if it does, we're going to look for an opportunity to jump into a practice trade going down. And as we've talked about, what do you practice? SH, that is the inverse fund, the ProShares single short for the S&P 500. When the S&P 500 goes down, SH goes up. Now, will we have that potential trade this week to practice? Don't know that's going to happen. We're going to let the charts lead us, show us what to do. What do we see going on the Qs? Well, we don't have really as much of a doji as we do as a red spinning top with a long wick on the bottom. So showing us we've got some potential for down movement. We see that the weekly chart does appear to be slowly pulling away on the price percent oscillator from the red signal line. Derivative oscillator losing downward momentum. But when we're going to look at that 2-day chart, didn't have enough energy over the course of the day because, of course, the Qs was up 1.22% to crossover going down, so that's not happening. We do have a red candle drawing on our Heiken Ashi or average pace candlesticks. Remember, it's different than your typical open, high, low, close candle. So we'll pay attention, see what there is to learn from that derivative oscillator continuing to lose momentum. Will we have a crossover going down so that we might have an opportunity to jump into a downward play on a practice trade tomorrow? Don't know, but keep your eye on the 2-day chart, both on the Qs and on the S&P 500. Now, what's the 4-hour chart showing us? Down in the morning, popping up in the afternoon. Derivative oscillator still negative, pretty much flat, maybe heading up a little bit. And the price percent oscillator is losing downward momentum. So again, we're waiting on the 2-day chart to show us what to do when it comes to our practice trades on the S&P 500 and or QQQ. I would guess from how close the price movement is there, the Qs might be the more likely candidate that we might have a practice trade on. So we'll pay attention, watch, see what there is to see. Now let's leave stocks, go to bonds. We see on the weekly chart, bonds have crossed over going down so far. Bonds were down for the day, 1.46%, even though we see a green open box up candle right now and really don't see a tiny, tiny, tiny little wick on the bottom. But again, price percent oscillator is showing us downward momentum and the derivative oscillator is gaining lots of downward momentum. Go to the 2-day chart. What do we see there? Well, the 2-day chart is also trying to keep heading down. And again, we'll keep an eye on things and see what there is to see there. And again, it is quite curious. It's a weird one. We're going to wait and see how that weekly chart shakes out at the end of the week now that it's pulled through, heading up. And we're going to also look at the 4-hour chart, which again, going up for many, many days and now starting to roll over. Again, down 1.46% for the day. Hasn't crossed over going down, but keeping in mind that we have the 2-day chart in a confirmed down move. The weekly chart has not finished drawing, so it really doesn't give us the opportunity, if we follow our rules, to jump into that down move. We have to wait until this week shakes out and just see what there is to see. Remember, you don't have a candle and you don't have a crossover until the weekly candle is drawn, and it has not finished drawing at this point. That will happen on Friday. So again, we're going to go by our rules because why? The rules tend to work. So again, pay attention. Let's continue to watch, see how this week shakes out. The markets, my friends, I agree with you. They are a bit odd. What's going on with the gold chart on the weekly chart? Well, the gold chart appears to be trying to cross over going down. And again, it did not manage to do that over the course of this last week, is trying to do that, it appears, this week. Again, getting closer to that. We'll see how the week ends up. Derivative oscillator gaining downward momentum, price percent oscillator heading down. We have a green open box candle, almost again another spinning top. And we'll continue to watch. Really, we've seen a sideways slide going into the 3rd week on gold. Go to the 2-day chart. What do we see? 2 days already in a confirmed down move. So again, waiting to have the weekly vertical crossover occur potentially at the end of the week before we look at jumping into a down move. We look at the 4-hour chart, and this is the first, again, down day we've had in a while. The first down day we've had in a while on gold, down 1.85%. Don't have a crossover yet going down in gold. That might be coming soon. So again, we'll pay attention to that and see how it shakes out. So what are the most likely plays that we can get into on practice trades in the next day or two? Perhaps we can jump into a down trade on the Nasdaq 100. If we have that 2-day crossover, you can look for an opening for a down play in that, if indeed that occurs at the finish of the drawing of the candle on Thursday afternoon. So remember, PSQ is the inverse, so that's something for you to look at. PSQ, it is the ProShares single short, and that again goes up when PSQ goes down. So we might have an opportunity there, and of course the S&P 500, like we said, it may be crossing over. It's going to be a little harder for that to happen. Just have to see what happens with prices on Thursday. And again, still waiting for that weekly chart to cross over going down on both TLT and gold before we jump into those trades. And again, want you to continue, practice, find every opportunity to do practice trades. Don't forget about the trade worksheet, the daily market worksheet, and the weekly market worksheets. They're available for free in your show notes. We have a great training today on our master indicator. If you are a subscriber, you will see the link in the show notes to our master indicator, the price percent oscillator, to help you understand why we use it. It's very similar to the MACD, but it's better. Why is it better? Watch the training. Again, you'll get a great deal out of it. Folks, that's where we are. If you haven't purchased our book, we'd love to have you buy it. I have an autographed copy waiting for you. Thank you to all your Patreon members for all of your support and help underwriting the work we do here at chartingwealth.com. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.